Snipers, you have to see what's happening in the cryptocurrency market this Tuesday as Bitcoin is slowly grinding its way down below 35,000 US dollars, exactly like we talked about yesterday with today's daily candle low at 32,200. Now, we've yet to see real volume come in, which validates the thesis that we've had on the Snipers channel over the last 90 days that if we're going to see Bitcoin break 30,000 US dollars, there is going to have to be a lot of sell pressure on the order books for that to happen. And so I want to leave this $35,000 level on the chart today because we are playing in a range right now where if we're below 35,000, the next level of real accumulation and distribution from when we passed through the $20,000 to $30,000 range was at the $26,000 level. And so what that means is anytime we're below 35,000, the chance of Bitcoin coming down to 26,000 is on the table. It's a destination for Bitcoin right now if we're below 35,000. But we know that every time Bitcoin has came down to 30,000, we've seen reactions and volume, and that tells us that 30,000 is also a significant level. So are we going to see Bitcoin continue to take the ladder down towards this $30,000 level and then test this area to potentially see a push to the upside, or is there going to be enough sell pressure and volume on the order books to bring Bitcoin below 30,000 so that we could finally see Bitcoin's reaction to these lower prices? If that's the case, we have this $28,000 level we've been talking about as a structural support to form a lower low, but then we also know that we have this major multi-year support level right at that previous all-time high at 20,000. Are we going to see a wick into that $20,000 range? All of that's on the table for those that have been tuned to the Snipers channel, but we're going to look into the more micro timeframes to talk about Bitcoin between 35,000 and 30,000, because inside of this range, there could be a lot of momentum and a lot of opportunities for altcoins, because for those that were tuned in 3 weeks ago, I don't know if you remember, but when we entered Ethereum at 1,700 on the 26th of June, it was when Bitcoin made this higher low, and this was the best opportunity to get into altcoins throughout the whole consolidation, at least for Ethereum, because we got the lowest US dollar price here. So if Bitcoin comes and forms more of these higher lows, does that mean there are going to be opportunities on the table that most people would miss if they're not paying attention to altcoins? Of course, if you're tuned into the Snipers channel, you're not going to miss those opportunities because we are going to cover altcoins and Ethereum exactly as we were talking about. Because Bitcoin is showing weakness, we are now below 1980. I decided not to go long here because we already took a long position at 1760 on the 26th of June. And so 1760 was a great entry. 1980 isn't that good of an entry anymore. And even 1760 isn't that good of an entry anymore. I'm going to talk about that later in this video. But we are seeing weakness here at this 200-day moving average, crossing this 1981.5 support. That doesn't really give Ethereum the best outlook over the next few days. I want to talk about what the targets could be to the downside. Now, if we get back above 1980, that would be extremely positive. That could happen if Bitcoin does start to resume its trend back towards 35,000. We'll talk about more of those scenarios, but I do want to address the Ethereum weakness right now, testing this 100-day moving average. Are we going to see a bounce here? Doesn't look like it. If we come down further, we have 53,500 Satoshis. We didn't get to test it when we initially formed this lower low here on the 26th of June. This was also when we entered Ethereum. So if we finally come down and test 53,500 in the macro, we're still bullish for the Ethereum to Bitcoin chart because this is a bullish flag with these highs, these lower highs, and then obviously we have these lows and these lower lows. So a lot is happening with the altcoin markets, but because we're seeing a lot of fear, we're still seeing weakness with Ethereum, and that's going to translate into other altcoins. Total market cap, not much to talk about here. Still camping out at that 200-day moving average. Others' dominance staying above 12.2. As long as you're in the fundamentally sound coins like Cardano, Ethereum, you're not seeing really extreme downside right now. Bitcoin dominance still chilling out. But I want to talk about traditional markets today because the DXY is pushing up. This is one of the reasons that we're seeing Bitcoin starting to take the ladder down. But we haven't seen Bitcoin take the elevator down yet. And so if this DXY really is breaking out of this consolidation here, where this would traditionally be a bear flag because there's higher highs here, right? And higher lows, but we're still seeing strength above 92.62. This was a rocket that Jerome Powell launched on the 16th of June when he announced interest rates are going to possibly rise into 2023. So this is a rocket that has yet to see its price discovery unfold. It could invalidate this bear flag and continue further up. That wouldn't be good for assets if the DXY comes to 93.82, because that could cause Bitcoin to take the elevator down. So I want to talk about what we're watching here for the traditional markets. Of course, with the DXY pushing up today, it's also causing the S&P 500 to kind of come back down this weekly open to retest it. And so we'll talk about that as always. You guys are watching the Snipers channel. My name is Naeem Al-Abedi. Remember to smash the like button for the YouTube algorithm. Some of you on the comments were saying, oh, Naeem, now you're saying Bitcoin's going to dump. Guys, I've stuck to my opinion more than any analyst in this market throughout this whole consolidation. I've maintained myself saying 34,788 is the most important resistance level for Bitcoin right now. And at this point, with the 50-day moving average so close to this $34,788 level, and by the way, this wasn't there before we called out 34,708, but now we have the monthly open at 34,708. That's not a coincidence. That happened after we had this level drawn on our chart for months. So we know this is the level, 35,000. We know that's the level. If we can't get above 34,788 at this point, the only next destination where there's real volume and accumulation is going to be this $26,000 level. Now, that doesn't mean we're not going to see volume on the way there. And the reason that's the case is because even though when we came through these levels, like 20,000, 30,000, 40,000 last year or early this year, that's where we saw the volume get distributed. Now we're seeing the volume on its way down get distributed in different ways. And one of those ways is below 30,000, we know there is now a lot of volume. Every time we've come below there, we've seen pressure and volume. So the fact that Bitcoin right now is taking the ladder down below 35,000 towards this $30,000 range validates my opinion that what we're going to most likely see here is Bitcoin between 35 and 30,000 can consolidate. This potentially could garner opportunities for altcoins like Ethereum, like we saw here on the 26th of June, right? But every time we're coming close to this $30,000 range, we're playing a very dangerous game on the long side because we're in this range that takes us to 26,000. So that's why I believe if we continue to take the ladder down here, we need to practice patience, because when we approach 30,000, the only way we're going to see the market discover lower prices is if enough volume on the order books come in and can bring the price below 30,000. So what that means is, number one, there is a potential we could test 28,000, but what we also know is because there's volume here, there's a potential we stay in these price ranges for a very short amount of time. And so having a wick to 20,000, you guys know, is on the table. Have those buy limits at 26,000, 24,000, and 20,000 just in case for Bitcoin. But let's say we stay above 30,000 and maybe we don't get to 34,788. If we can get there at any point in time, today, tomorrow, next week, it doesn't matter at this point. The 50-day moving average is at 34,708. If we can get there, we can start talking about a reversal. But if and until that happens, and if we're above 30,000, then I think we need to be watching altcoins. I think that's the play here, because we know when Bitcoin is consolidating, altcoins perform. And just because we're below 35,000 and above 30,000 doesn't mean Bitcoin is going to see further downside. All that means is it's floating. And it's floating because we're in such a large range. So we want to monitor this area. Of course, we get above 34,708. Now we can start talking about a rescue operation because we're above the 50-day moving average. So if altcoins are going to be a priority while Bitcoin is consolidating, let's look at Ethereum. It leads the altcoins. It's the biggest altcoin. We are seeing weakness, as I talked about. Because there's fear in the market, we're below this 200-day moving average. We already got our entries here for those that have been tuned in our channel on the Discord at the $1,700 area. It's not as good of an entry anymore. What I'm looking for Ethereum is If we see continuation back above 1980, that's strong. We're back on our way to 3,000. And so the same way Bitcoin has its range down to 26,000, Ethereum is kind of in an opposite scenario where its range actually goes up to 30,000 if we're above 1980. But when we get below 1980, now we're testing these support levels. I'm going to have my buy limits at 1,700, 1,600, 1,400. I believe that if we do see any downside come in, if it's going to be fast, then Ethereum is also going to only stay at these lower price levels for a short amount of time. This is the previous all-time high from 2018. Any entries below 1760 to 1440, in my opinion, is the prime spot here for Ethereum. We get back above 1980, I think we still continue our trend up, so I'm glad we got our entries at 1760. You see, so that's why it pays to dollar cost average into good positions, right? So now that we have this entry at 1760, let's say we just flirt right above 1760, but then continue back above 1980, I'm cool with that. At least I got my 1760 entry. If that doesn't happen, we see further downside, perfect. I get better entries down here, and then we continue the ride up. At least I know I've been in profits for the last few weeks because we got a good entry, right? So that's what matters here with Ethereum. The Ethereum to Bitcoin chart could see some downside and it'd still be a bullish trend in the macro. I wouldn't be surprised now that if we break this 100-day moving average, it's like the second time we're testing it, you knock on the door multiple times, then it's more likely to break. We come down to 53,500 Satoshis, totally fine with me, right? So we look at the total market cap, others dominance, Bitcoin dominance. We're not seeing much changes there. But we want to address traditional markets. So U.S. oil is actually pushing up now. This is a commodity. It's a good leading indicator in some ways. We're back above this weekly open. It looks like it wants to trend up. And that's happening while the DXY is also pushing up. So that's a very interesting thing. But the S&P 500 certainly get affected by the DXY. You can see it's pushing down. So right now we're seeing the DXY, in my opinion, in a very sensitive area. Above 92.62, we're playing in this range that if we start to fulfill this range back to 93.82, which could happen at any point, these charts tend to move fast, especially through our major levels, then that could cause traditional markets, cryptocurrency markets to take the elevator down. But we get back below 92.62, that's the preferred scenario that I would like to see here coming into this week. So we're still very early. It's only Tuesday. We have a lot more to, price action that's going to unfold this week. And we'll keep you guys tuned in for those that have been tuned into the Cypress channel. And I want to give away one of my favorite books on value investing to one of you watching this video, Principles by Ray Dalio. If you want to win this book, comment below, share this video. You'll have a chance to win. We're going to wrap up this video. Buy the Dips has great content as usual, Naeem. Love the analysis. Can't really remember how I came upon your channel, but glad I did. Thank you, Buy the Dips. Send me a message on Instagram. You won Principles by Ray Dalio. If you want to win this book, comment below. Share this video. Remember to smash the like button. Let's crush this YouTube algorithm and hit 100,000 snipers on this channel. Thank you all for tuning in today. Until next time, snipers.